AM Best is getting ready to host its annual insurance market briefing Europe on November 11th. Joining us now to discuss the briefing is Nick Charteris-Black, Managing Director, Market Development, EMEA, Greg Carter, Managing Director, Analytics, EMEA and AP, and Mahesh Mistry, Senior Director, Credit Rating Criteria Research and Analytics. Thank you all for speaking with us today. Nick, can you give us an overview of this market briefing, its purpose, and how this year's differs from prior years?
Yes, certainly, Meg. As you said, it's an annual event normally taking place in the City of London, covering the European and broader EMEA market. I normally describe it as something of a review preview. It's an opportunity to provide an overview of rating activity in the past 12 months for the European and EMEA region, for us to provide some commentary on our market outlooks in key territories and sectors, and again to cover some topical industry thematic issues. And obviously this year the emphasis is going to be on the impact of COVID-19. In the afternoon, as usual, we'll be focusing more on rating methodology and some emerging risks and issues. For example, innovation, ESG, IFRS 17 and ERM. Well, in terms of how it differs, it's following a similar format. Obviously, it's going to be on a remote basis and somewhat slimmed down from the normal physical event, but very much with a focus on using our own people with comments and commentary from our own analysts rather than external panelists.
How has AM Best responded to the COVID-19 pandemic, both analytically and operationally?
Well, back in May, the first thing we really did from an analytical perspective was to perform a stress test on rated companies, covering both the asset and the liability side of the balance sheet. And the results of the stress test we published in a special report in May. At the same time, we issued a questionnaire to rated clients covering more of the operational issues. From our own perspective, AM Best operationally has been working on a remote basis, as have nearly all our clients using all available technology. And we found this has been largely successful. All our analytical remote meetings have been held on a remote basis, and certainly from my perspective, talking to our major clients in recent weeks, they've all found that this has worked pretty well.
Greg, could you give us an overview of the rating trends AM Best sees across Europe, Middle East, and Africa this year?
Certainly, Meg. It's been very stable. There's been actually very few rating movements, and the vast majority of rating actions have been affirmations. When you look at the small number of rating actions that have taken place, we've actually seen more downgrades that have outpaced upgrades by 2-1 this year, which is a reversal of what we saw in the previous 12 months. However, the numbers are small, so I don't think you can read into that anything about any significant changes in credit quality. And when you look at the outlooks as well, our outlooks have slightly more skewed in terms of those that aren't stable, which again is the vast majority, slightly more skewed towards the negative than the positive.
What are some of the main headwinds and tailwinds that market participants are watching out for?
Well, clearly, at the moment, the main headwinds are coming from COVID-19 and the impacts that that's having on the sector. We've seen asset price volatility, declines in asset values, and then recoveries in assets. We've seen declines in yield on fixed income investments, which has had a temporary effect of lifting values, but has a longer-term impact on the expected returns. We've also seen some liabilities arising from COVID-19 in terms of claims that have been paid or reserved for. But when you aggregate those across the industry globally, we're still only looking at the impact of probably a very large or a couple of large major hurricane activities. So at the moment, the losses are manageable, but they are clearly denting results for this year. One longer-term risk is that the exposures related to business interruption could start to creep if legal cases move those forward. And we're also seeing the challenge of growing the top line in a shrinking economy. And that clearly has the decline in economic activity normally feeds through directly to a decline in gross premiums. We're also looking perhaps more closely in Europe at the potential risks of a hard Brexit, which with only 8 weeks to go to the end of the year is now a very real possibility. When we look at the tailwinds supporting the industry, well, this does remain a very well capitalised sector. We've been saying this for some time, and the impacts of COVID-19 have not really affected capital positions for the vast majority of companies. Longer term, the prospect of growing healthcare and retirement benefits as governments particularly across Europe, find that the benefits that they currently provide are unsustainable in the long term. So there's a much greater impetus on the individual to save for their healthcare and for their retirement needs. And that presents a long-term growth opportunity.
Can we say yet if the 2020 pandemic is the largest known unknown risk that the industry is experiencing?
I think that's questionable. I think there's lots of moving parts when it comes to the pandemic. There is a tremendous amount of investment going into developing vaccines around the world, and the sheer volume of research that's going towards that and the money that's being spent on that research is very significant. There's also a great degree of coordination in that research and development globally. The world is also developing better treatments, better medical processes, and faster detection. So a lot of those things will work to mitigate that risk. Although with a lot of moving parts, it's very difficult to predict exactly what the longer term impact of COVID-19 will be. I think if you contrast that with climate risk, I think climate risk is a much greater challenge for the industry. Budgets there vary from government to government. There's very little coordination globally, and there will be no silver bullet in terms of solving climate risk. Whereas an effective vaccine, could bring COVID-19 to a relatively quick end. So I think the greater challenge for the industry over the longer term is probably climate risk.
Mahesh, like all sectors, new challenges and opportunities lead to new solutions and approaches. What are some of the key emerging issues facing insurance businesses today, and how are they being tackled?
There are a number of issues that are facing the insurance sector at this point in time. As we are aware, we are in the midst of a pandemic. We've had the first wave of the pandemic, and the second wave is on the horizon, if not affecting some markets at this point in time. It's important to note, though, how insurance companies have fared over the last 10, 15 years. They've weathered the storms of, say, a financial crisis, a sovereign debt and liquidity crisis, and numerous catastrophe events as well. And as a result of that, the ERM practices have been strengthened over that period of time. However, the pandemic has been unprecedented, and it has given rise to, say, unexpected accumulations within the insurance sector, not just on the life and health side, but also on the P&C and on the investment side as well. We are also seeing the strains that are present in economies, which are supported by government quantitative easing packages at this point in time. And in the near future, this level of support is likely to reduce and create further challenges for the sector, such as on the liquidity side and potentially negative interest rates. Looking, say, a bit more closer to home in terms of some themes which are out there, which could also impact the market. We have innovation, whereby AM Best has updated its criteria earlier this year. We believe this is critically important in terms of companies' business profile assessment, and will become even more important as we progress over the next few years. The pandemic has accelerated the need for innovation within the insurance sector, and that has been evident over the last 6 months. In addition to that, we have environmental social governance. This again is a hot topic which has gained traction over the last few years. I don't think we go many days without hearing something in the market about climate change or sustainability, which is out there. And companies need to adapt their strategy, their profile in relation to ESG related risks and opportunities going forward. So this is another key area of interest that we have. In addition to this, we have IFRS 17. Again, this has been a long time in the pipeline, and earlier this year, decisions have been made in terms of companies that need to comply with IFRS 17 to be there in January 2023. This will affect mainly the non-US markets, but it'll be a test to the insurance companies to ensure that their systems are up to scratch and ready to deal with the data requirements of this new standard, in addition to any decisions that they need to make on their portfolios. Moreover, AM Best will also need to make some important decisions on our rating criteria and how we see the benchmarking of this standard against existing practices.
What is AM Best's experience with these new emerging issues for the industry, and what are some of the considerations they have to make when assessing firms' preparedness or alertness in relation to these issues?
When we consider emerging issues, it is critical to our analysis to understand how companies are dealing with these emerging issues. So, rating analysts will want to know from an ERM perspective how companies are managing these risks. One example is how they are managing this pandemic. As a result of the pandemic, we're seeing increased cyber exposure within the market. And then this then filters into the company's stress testing approach, what they were doing before in terms of the scenarios and sensitivities that we're testing, and whether that's changed considerably as a result of the current market environment. Is, say, a pandemic and cyber risk higher up on the radar of companies? So it is very important that we look at these emerging or black swan risks that are out there and how companies are preparing to ensure that their balance sheets are supportive of these risks going forward. So if we extend the evaluation further, yes, we do look at the ERM side of the assessment, but we'll also want to know how these risks could potentially affect the balance sheet, operating performance, and the business profile of the company. What actions companies are taking in relation to these risks to ensure that they are prepared and they do have, say, a sustainable strategy going forward.
Mahesh, Greg, and Nick, thank you so much for speaking with us today. To view the briefing, visit ambest.com. For AM Best TV, I'm Meg Green.